Welcome back to the show. Check out these headlines. Will crypto hit a new all-time high or crash? We'll take a look at it. Why was crypto even created? Because it matters. And what does crypto look like in 2026? Somebody roll that beautiful intro so we can find out.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show. You can follow us on X, YouTube, and DigPerspectives.com for exclusive content. And very quickly, I just want to let people know, because of the recent trouble I've had with YouTube, that the Patreon is the place to be perfectly honest. Join us there. And honestly, some of my videos will get a little bit shorter so I can create more value in the Patreon, because I'm never sure what's going to happen on YouTube. I don't do anything wrong. I always follow what I'm supposed to the letter, and then you still get into trouble. So if you really want to support the channel and you love the conversations we're having here, I really do encourage you to join us there, because I'm going to bring more and more value inside of that group for the real audience inside of there. So right now, $3.58 trillion market cap for crypto, and it's up 1.6. Bitcoin 103,000 plus, Ethereum 3,500 plus, XRP's 229, and the range of price here between 225 and 232. We'll keep an eye on it. Let's take a look at this. Start getting the peace of mind you deserve for your digital assets. Sign up for free, $100 funding bonus if it's a new account. Roll over your old 401ks into crypto IRAs and physical gold and silver IRAs. Keep your crypto safe in a premium custody account, which is different than your IRA. So really set up and designed to help long-term holders. Premium grade custody trade 24/7, 365, no monthly fees. Minimum 1% conversion fee with a slight little other fee to go along with it, but very, very affordable. $15 billion in transactions plus 200,000 plus accounts. Can't be wrong, ladies and gentlemen. Click the link underneath the video and get started today. You really do deserve the peace of mind for you and your portfolio, and you can get it at iTrustCapital. Take a look at this. Speaking of peace of mind here, this is why I haven't taken any loans against my assets at this point. Over the coming weeks and months, we're going to find out who's been swimming without a suit. Crypto dumped $830 billion since October's highs. Well, to broaden the conversation, crypto market's all-time high was $4.35 trillion just a little over 1 month ago. And here we are now sitting at 3.58. So we've lost almost $1 trillion in the market. That's where we're at. That is staggering. That's why I won't borrow against my crypto at this point. I want to someday, but I want the price to be much more stable. And I want a situation where if I do borrow against my assets, one, I want to make sure I don't get liquidated. Two, I want to make sure what I'm able to borrow is a sizable enough of an amount of money that I can invest that money and make the return I need to pay off what I've just borrowed. So it's self-fulfilling, right? That's what I'm looking for. And obviously being able to borrow against the assets instead of cash them out avoids a cap gains moment, right? So definitely a very strategic thing, but you got to be careful what you decide to do and when you decide to do it. Now, this came out here just to wrap in, because you guys know at this point, I believe that, all the things we're seeing, the government shutdown, the tariffs, the trade deals, all of this is tied back into and the Fed not wanting to cut rates because the Fed's not allowed to release their own CBDC. All of this is tied back to the new digital on-chain economy and where we're going. And speaking of tariffs, this is President Trump announces that he will be paying a tariff dividend of at least $2,000 per person. Now, this will not include high-income people, but it will be paid to everyone else, and that is exciting. So now, with that being said, obviously, he also plans to pay down the debt, so we'll see how this goes. But nonetheless, I think people are getting, for those still in the struggle bus, this tariffs were working like a champ, right on time, just when people will need it the most. And I really do believe that for sure. And another vote coming today, even on Sunday, that the U.S. Senate will vote today to end the U.S. government shutdown. Let's see what the Democrats decide to do now that we're past the elections there. We'll see. So U.S. dollar decline since 1913, the creation of the Federal Reserve. Look at this. It's horrible where we've come. It's absolutely horrible. And we know that. And we know that because the dollar is the global reserve currency, we know that out of the last 5 to serve in that role, 2 of which had an 80-year lifespan, we're at 81 years with the US dollar in that role right now. This is why crypto exists. This is why these assets and tokenization were created. If there was anything that was looked over in the birth of the Internet of Information that we're using today, it is that they forgot to build a token as gas fees for all of the network. Imagine if you bought a SMTP, which is Simple Mail Translation Protocol that moves all email of the world. Imagine in the early days if they created a token with that protocol and you bought it. Imagine that. How much would that token be worth today if it existed? How much gas would it be burning to move emails in the billions every day? Maybe in the trillions, I don't know, but it's certainly in the billions. This is where we are today. They've created tokens on these new protocols to represent a gas fee, and other things are designed in different models as well to power these internet protocols that move tokenized value. That's why crypto was created at my house, not financial advice. And then this was announced too. This has been announced that they're going to introduce, Bill Pulte talked about this, introducing a 50-year mortgage to take the stress off of a lot of owners so they can own a property. Some would say to be enslaved in a 50-year note and that much more in interest. But ask somebody that's in a 30-year mortgage that's paying over $3,000 right now, and a 50-year mortgage have them at $2,600. This is where things are going. This is what is happening here. And I have to say, I think DAI's got it right on this front. This will make the real estate market take off like a rocket ship. Where will all that crypto wealth go? He's got it. I mean, well, he's always got it. He's the GOAT. But nonetheless, the point of the matter is that I think this is absolutely spot on. People are going to be looking for real assets to put their crypto gains into. Some will want to do a DeFi loan to make that happen. Some people will choose to cash out. You know how it works. But the reality is people will want hard assets, and a lot of people will want commercial earning hard assets, right? So this is getting exciting. Now, I want to take us down memory lane here. This is Chris Larson on what makes Ripple XRP unique for global payments. And then we're going to talk about some recent news that I feel validates and verifies every single thing that Chris Larson shares in this short clip. Take a quick listen.
Obviously there's the technology piece, the trust in the code, the trust in the stability, always being up and always being in a distributed peer-to-peer system. So that getting all those things right is really hard. Second is sort of the utility. Where can you use it? How do I bring dollars or real or Chinese yuan onto these platforms so you can buy whatever? That involves all kinds of regulatory issues, as we all know about. And then third is sort of the liquidity. Do you have enough market makers? Which again, the cool thing about these protocols is it can be anybody in the world. It could be somebody who's a student in the middle of inland China, or it can be the largest high frequency trading company on Wall Street. That's a cool thing, but we have to make sure that you get enough market makers in all these key currency pairs. So those are the kind of things we think about all the time: trust, utility, and liquidity. And then, of course, the other big thing going on here is reputational risk. I think that's where the industry is right now. You're seeing all these incumbents. Everybody's thinking about Bitcoin, math-based currencies, Ripple. They're all super intrigued. We meet with people like every day at the highest level. Where you are now is this fear of reputational risk of getting involved with these protocols. If a big bank gets involved, will they get this firestorm from their regulators? So that's what's holding everybody back. So that's really what we all have to work on collectively. How do you get law enforcement comfortable, and therefore then the banks are comfortable, and then that reputational risk is taken off the table, they see the value, and that's when you really start getting these things exploding.
Yeah, and that all makes sense because take a look at what we know. What do we know? MasterCard, now this is trending Bitcoin. They're trying to make fun of MasterCard and Visa because they got a larger market cap in the way of payment and volume is what they're talking about here. So MasterCard's volume 24.7 trillion, Visa's volume 38.9 trillion, Bitcoin volume 46.4 trillion, and that's transaction value in 2024. And they'll all use the XRP ledger before it's over. Don't believe it's still true. Let's take a look at it because it already is true. One, let's look at Visa, which has acquired Ripple partner Currency Cloud.
Now, Visa and Swift have announced a collaboration to streamline international business-to-business payments by strengthening connectivity between their networks that would move trillions in value globally.
That's right, and the organizations will work together with the aim of providing financial institutions and their customers with more choice when sending money across borders, while improving the end-to-end speed and transparency of those transactions.
Earlier this week, I spoke to Chris Newkirk, global head of...
And we don't need to hear him speak to anybody. The point is from Mr. Mann's post, you can see, give him a follow, that the deal was worth $930 million. Yeah, that's Visa. And guess what else Visa's doing? They're partnered with Thunes, who's partnered with Ripple and the XRP ledger. And Visa and Thunes for global digital transactions. Thunes uses XRP for settlement. Write it down, right? You're tracking it all, right? Ripple partners with MasterCard. This just dropped hard the other day. Now, we've known they've been partnered for a long time, but the fact that they announced they were introducing real USD credit card settlements on the XRP ledger. Come on in. You're watching adoption unfold right before us. You're watching the rollout of the Internet of Value right before our eyes. Brian Armstrong urging the Congress to remove capital gains tax on Bitcoin payments. How about all crypto payments, especially ones that are efficient? Let's not make it about one versus the other. You know, this is really, really important that they get this right. Again, it goes back to what I've talked about, like no tax on crypto. And it should be no tax on crypto for all U.S. domiciled assets, for which I feel Bitcoin is, because I think it was created by the NSA. Nonetheless, we won't get our needle stuck on it today. But nonetheless, this is how you draw the rest of the world to a protocol if you want to have all the money on it. You make it non-cap gains so everyone will use it. And if everyone's using a ledger and they're plugged into the ledger end to end, just like SMTP, Simple Mail Translation Protocol for email, why do we need to be charged for it? That's the point. That's the world we're moving to. Now, whether we end up with us being able to just not have cap gains, which is highly unlikely, or whether we end up in a situation where they cap an amount for a retail investor, $5,000, $10,000 a year in payments can be deducted, or whether they provide virtual asset service providers and financial investments and banks, and they could do it all for free and not be charged because they're not investing in the asset. Who knows? We'll see what happens. But to me, if you want to proliferate these protocols, then you'll want to make zero cap gains to do it in short order. We'll see what comes of it, because this is the world we're moving to right here. In case you're wondering why we get so much heat from the maxis, this is it right here. Because you can't put the world's money on Bitcoin. You can put the world's money into it, but you can't put the world's dollars on it. So there's different roles to play. Just like SMTP is for email, HTTP is for websites, so on and so on. And listening to the tribalism out here, as I've said for years, is like listening to one camp say, I like website protocol better. And then somebody else going, well, I like email protocol better. You know, it doesn't make any sense. It doesn't make any sense. Listen to this. Let's round it out right here in case anybody's not sure about what this really means. There's a reason XRP sits in the middle of all the world's money here. And I believe it's said quite perfectly here by Brad Garlinghouse.
But at the end of the day, we want to do things that are good for the XRP ecosystem. Trust in XRP, utility in XRP, and we want to build liquidity in XRP. Each of the acquisitions we do, in one way or another, we believe it will do those things. Some people may look at it and be like, I don't really, scratch their head a little bit. Well, I promise you that we see in the three-dimensional game of chess, we see how we believe that's going to evolve. Sometimes we'll probably do things that are more obvious and some less obvious. That's okay with us. Now, on XRP specifically, look, do I think that we have room to grow? Absolutely. I think as we get more regulatory clarity, you're going to see more institutions, more capital, more entrepreneurs. We don't advocate that it's the right, one size fits all, that you should do everything on the XRP blockchain. There's other blockchains that are going to be better at different use cases, and that's great. But we think that we'll continue to champion XRP use cases that we think are uniquely good on that blockchain. But at the end of the day, we want to do things that are good for the XRP.
Let me hit the stop button. So there clears up any confusion, right? XRP smack dab at the heart of everything they're doing. Now let's talk about what's going on for 2026 and where I believe crypto is going to go, the direction that crypto is going to go in 2026. Yeah, let's talk about that.